Hello, welcome to Edubbey Dynamic Solution Platform. Let us look at trading. Trading cryptocurrency involves buying and selling digital assets in various markets to take advantage of price fluctuations. Whether you're a novice or an experienced trader, understanding the basics and employing effective strategies is crucial. Here's a general guide to trading crypto. 1. Educate yourself. Understand the basics. Learn about blockchain technology, cryptocurrencies, and how different coins and tokens function. Research market trends. Stay informed about market trends, news, and developments in the crypto space. 2. Choose a reliable exchange. Research exchanges. Select a reputable cryptocurrency exchange that aligns with your trading needs. Security measures. Prioritize exchanges with robust security measures to protect your funds. 3. Create an account. Registration. Sign up on the chosen exchange, providing necessary information and completing any required verification processes. 4. Fund your account. Deposit funds. Deposit your desired fiat currency or cryptocurrency into your trading account. 5. Develop a trading plan. Define goals. Set clear goals for your trading activities, such as profit targets and risk tolerance. Establish strategies. Develop trading strategies based on technical analysis, fundamental analysis, or a combination of both. 6. Risk management. Set stop loss and take profit levels. Determine specific levels to limit potential losses, stop loss, and secure profits, take profit. Diversify. Avoid putting all your funds into a single asset. Diversification can help manage risk. 7. Technical analysis. Candlestick charts. Learn to read candlestick charts to understand price movements. Indicators and patterns. Use technical indicators, e.g., moving averages, RSI, and chart patterns to analyze price trends. 8. Fundamental analysis. Stay informed. Keep abreast of news and events that may impact the cryptocurrency market. Evaluate projects. Understand the fundamentals of the cryptocurrencies you're interested in, including their use cases and development teams. 9. Trading strategies. Day trading. Buy and sell within the same day to capitalize on short-term price movements. Swing trading. Hold assets for a few days or weeks to take advantage of medium-term trends. Holding. HODL long-term investment strategy, where you hold assets regardless of short-term market fluctuations. 10. Use risk management tools. Leverage caution. If using leverage, be aware of the risks involved and use it judiciously. Stablecoins. Consider using stablecoins during volatile market conditions to mitigate risk. 11. Keep emotions in check. Discipline. Stick to your trading plan and avoid impulsive decisions based on emotions. Patience. Cryptocurrency markets can be highly volatile. Exercise patience and avoid FOMO, fear of missing out. 12. Security measures. Secure wallets. Use hardware wallets or secure software wallets to store your assets. Two-factor authentication. 2FA. Enhance the security of your accounts with 2FA. 13. Record keeping. Track trades. Maintain a record of your trades, including entry and exit points, to evaluate performance. 14. Continuous learning. Stay updated. The cryptocurrency space evolves rapidly, so continually educate yourself about new developments and strategies. 15. Legal and tax considerations. Understand regulations. Be aware of the legal and tax implications of cryptocurrency trading in your jurisdiction. Trading cryptocurrency can be rewarding, but it involves risks. It's essential to approach it with caution, conduct thorough research, and continuously refine your skills and strategies.